Okay, welcome back. It's Angela and Colleen, Homes and Loans.
Hi, I'm Colleen with CMG Home Loans.
Colleen's been around forever, so have I. Please don't judge us. I mean,
We're old.
We're old. We're gluttons for punishment. We're here to help. We're here to educate you. And today we are going to be talking about buyers, especially in 2026. Most recently, I've been seeing a lot of first-time home buyers finally come back into the market. I feel like they were scared off the last couple years.
Yeah.
And so I'm going to let Colleen kind of tell you guys about all the options we have, because outside of just general mortgage programs, whether that be VA, FHA, conventional, USDA, there are certain first-time home buyer programs. And so we're going to touch on that. So Colleen, tell us a little bit about that. Exciting. People love free money. They love free money.
It's the beginning of the year, so everyone's doing their taxes. So hopefully they'll be getting some tax refunds. So like you said, I've noticed a tick up of home buyers entering the market since the beginning of the year. So I've been doing a lot more pre-approvals, but a lot of first-time home buyers.
Yes.
And I know it's probably because it's tax time. But there are numerous programs out there if you don't have your own down payment. So obviously you can get gift funds from family. That's always an option. But there are assistance programs. There's county programs that will offer what we call down payment assistance, SHIP funds. Orange County has funds.
So there's
Osceola.
SHIP, there's Bond, there's Hometown Heroes. Am I missing any?
Nope.
Okay, so let's break down the three.
Yeah, so SHIP is a county program. So a lot of the counties have their own down payment assistance programs where it's based on income and credit. I believe Orange County is down to, and Osceola is down to a 620. So as long as you have a 620 or higher, and then it looks at how many's in your household, how many children you have, if you're married, it's going to look at your total income. So they all have income caps.
So with SHIP, though, and with each county, do they each offer different amounts? Like, is Orange County offering a max of $25,000, but Seminole County might only offer $10,000? Each county has their own guidelines.
Each county has their own budget.
And each county's budget runs out at a certain point.
Correct.
So we only have it until it's available, and then what happens? They replenish it.
So you have to wait. Usually you got to wait for the following year. So I know Orange County is really good. They typically don't run out of funds.
That's good.
I believe Osceola still has funds available. I emailed them about 3 weeks ago, and they still have funds available. Seminole County, I'm not sure right now. They tend to run out of funds. But the other alternative is the bond program.
Well, let me just stop you really quick, because for the SHIP program, which is county-based.
It's county-based.
So what we mean by that is that if you are looking for a home in anywhere in Orange County, then you would qualify, you could see with Colleen if you qualify for the SHIP program. And then she'll give you the worksheet that says, okay, you've got you, your husband, 2 kids, and your mother living in the house, right?
Correct.
Whatever the case may be. And then what's your income? And then based on that, there'll be a sliding scale. So if you make, on the lower end, you get more down payment assistance. If you make closer to $70,000 or whatever the cap might be, you might only get $10,000. Okay.
Right.
But then if you then start looking in Seminole County, so you're looking in Orlando first, right? And there's plenty of funds in Orange County's SHIP program. But then you decide, oh, we really like the schools in Oviedo, and now you're in Seminole County. Again, you have to go back to Colleen to see how much funds are available, right? And what the guidelines are, because they're different in Seminole County.
Every county is going to be different.
So that's the only thing. And SHIP programs, tell me the difference, because I know some you have, it might be 0%, or you have to pay it back, or it gets paid back.
So usually it's prorated. So
explain that to people.
Yeah, so it's typically like 10 years. So depending on when you sell the property, so let's say you're in the property for 5 years, it's usually prorated how much money you have to actually pay back. So every county's
day
different.
You own it.
Yeah.
So say they give you $10,000. Every day that you own it, $100 comes off of that balance, or whatever the case may be, right? $5 comes off, whatever it might be. And so 5 years later, you now only owe $5,000.
Exactly. It's all prorated based on how long you own it.
And so if you stay there the whole 10 years, you pay back nothing.
Right.
You get 100% of what they gave you.
Correct.
If you try to sell it after 5 years, you would have to repay this
it'll be prorated.
This quiet, silent second mortgage. That would have to be paid back. So that's an important thing to understand. Now, at the end of the day, after 5 or 10 years, your home value, I'm sure, has gone up more than $5,000. So either way, it's a great opportunity.
100%.
Yeah.
Yeah.
So that's SHIP. I just wanted to touch on a little bit more of the details. So now
Yeah,
we're going to talk about.
and talking more about the SHIP is that your whole file has to go to the county for approval.
Well,
So
and with SHIP, don't you have to do a certification course
well, you
for
have
a
to go
weekend?
to an 8-hour
Yes.
class, which the county puts on. So you go get your certificate
Yes.
and you provide it to your lender to say, I've gone through the class. So you have to provide the certificate. But the difference is that with the county, we have to send a full package and then they have to approve it. So you've got to get your lender to approve your loan and then you send it to the county. And sometimes they might ask for more, like they ask for the home inspection. They ask for certain things that we as the lender don't ask for. So there is a little more paperwork involved when you do these type of county programs.
Well, I always tell people when you're doing the SHIP county program, I explain to them you're going to have to get a certificate. That certificate is generally good for 1 year.
Correct.
Right? So you have a year to find a home and get that. Otherwise, you're going to have to do it again the following year if you let it expire. So with that being said, you go to this 8-hour class, and that 8-hour class is really just preparing you as a first-time home buyer. They're going to go over everything that they think you should know before owning a home, about inspections, about insurance, about taxes, everything that goes into home ownership, about repairs and reserves. And, they want you to really feel
fully informed,
educated before purchasing home, because it's the biggest purchase, of your life in most cases.
Yeah.
So, but it's well worth it. I think it's great that you have to do the 8-hour class.
Yeah.
It really gives you a lot more insight. And honestly, people usually come back to me with some questions because they might not want to ask them in class, but then they'll ask me, which is fine. So I think SHIP is great. That's a great program. Bond is another one.
Bond, yeah. So the state has programs available that are available in any county in the state of Florida. Every county has their own income limits because they have income caps. You can't make a certain amount of money depending on how many's in your family as well. So it has income caps. It has minimum credit score of 640. So you have to have a 640 or higher. But you can do FHA, VA, USDA, and conventional with the state bond program. And there's different amounts. Like they have the Hometown Heroes, which is occupation specific. So, and there's so many different occupations.
I was going to say, it used to be really strict. Hometown Heroes was at one point, it was like you had to be like a police officer, a teacher, a doctor,
there's a lot on. There's massage therapy.
Now
there's
a lot.
Daycare workers. Yeah. Like there's so many.
I feel like everyone basically is covered now by Hometown Heroes, honestly.
Right. And I actually just looked up the other day, and there's about $11 million left.
Yeah.
So for Hometown Heroes, it's a first come, first served basis. And then once they run out of money, we have to wait for a new reissue of Hometown Heroes, which typically is like July, August.
I was going to say it's like that half-year mark where then they'll refill it. But once you're out, then you're sitting there waiting if you need that down payment assistance.
Right.
So.
And normally Hometown Hero funds run out quickly, especially when they didn't have occupation-specific guidelines, and it ran out quick. But we've had that for quite a while.
Is Hometown Heroes the same as far as it prorates for how long you own the property?
No. So that program, you have to pay back.
Okay.
No matter when you sell the property. So it's basically a second mortgage on your property at 0 interest. And then whenever you sell the property, you have to pay that money back, and they replenish the funds for any future home buyers down the road. So the other option that
So basically, it's like a silent uncle giving you the down payment and charging you 0 interest. But then they say when you sell the house, you got to pay me back. So just so people understand, right? Yeah.
And actually, Orange County has a separate bond program.
But, just to touch base one more time. So on the Hometown Heroes, you're not making any payments that entire time on that down payment assistance.
No,
I just want people to understand that.
And that 5% can be used towards the down payment and closing costs. So let's say we have a veteran who can do 100%. They can get that 5%, pay all their closing costs, and then whatever's left over, they apply it to their principal balance.
Yeah, that's amazing.
So a veteran can get in with literally nothing.
Yeah.
So that's a great program.
Should.
Yeah, absolutely, absolutely. So yeah, the money is it's a hidden second mortgage. They pay it back later, but it is a great option, and the rate is on it's very competitive. I looked it up the other day. It was 5 3/4.
That's really good.
So yeah,
that's really good.
So the Hometown Hero rate is great. Orange County has a separate bond program, and that one actually has a rate of 6% right now, and that one has $10,000 that they'll give you an assistance.
Well, the thing that I like, just in case anybody missed it, when we were talking about Hometown Heroes, she said it's 5%.
5% assistance.
So when she's saying that it's 5% of the loan amount, 5% of the purchase price, what are they basing that 5%
The
on?
5% is based on the loan amount.
Okay, so people understand.
Let's just say somebody's doing 3.5% on FHA. We're going to base the 5% on the loan amount itself.
Yes.
Which is still pretty significant.
No, that's a huge amount of money.
Yeah.
I mean, you think if you're buying a house for $500,000,
Right.
say your loan's for $500,000, it's 5% is a lot.
Exactly.
So, I mean,
And
that's very helpful.
The Orange County assistance is $10,000, but when I say Orange County bond, it's good in Orange, Osceola, Seminole, and Lake County.
Okay.
So there's different bond programs, and it's just going to depend on the buyer's needs, like where are they moving and how many's in their household. And then I'm going to look and see which program is going to work best for their scenario. I was just
going to say, which one are you usually seeing is the best for most people? Is it Hometown Heroes?
Well, Hometown Heroes,
because you're getting the most at 5%.
You're getting the most. It's got a really competitive rate.
Yeah.
So like the state bond, there's also the state bond, which is good in any county, and that one has a rate of like 6.5.
Yeah.
So it's just a difference in the rate. That one has a 10,000 assistance program.
Is that the max 10,000?
Mm-hmm. So you do get less with that program, but again, depending on your circumstance, we can look and see which program will work the best. We also have what we call FHA Buyer's Choice, where we can do a 3.5% or a 5% second mortgage for them. It's basically 100% FHA. So let's say you don't qualify for assistance.
We haven't seen that in a while, and that used to be called something else. So now it's called Buyer's Choice.
It's called Buyer's Choice. We actually have a couple of them. So yeah, there's a couple different.
What are the guidelines
options.
you need to do to get approved for the Buyer's Choice, where basically you're getting a first and a second to cover 100% of the mortgage?
You don't need to be a first-time home buyer.
Oh, okay.
You don't.
That's huge.
So let's say you're not a first-time home buyer, but you need the assistance. You don't have the money to put down.
Yes.
It's a great option. And then we have the repayable second and a non-repayable. So if you repay your second mortgage, you get a better rate on the first mortgage.
So they, you mean you're agreeing to that up front?
Correct.
Okay.
So I'll give my clients an option. Do you want to take the forgivable or the non-forgivable? You're going to get a better rate on your first mortgage versus the second. Mm-hmm. So it just depends on their
Where
scenario.
the non-forgivable, you're paying it off at closing, like when you sell it.
What? You're making monthly payments.
Oh, okay.
And the rate is usually 1% higher. I think it's 1% higher than what your note rate is. Mm-hmm. So it's an option for out there. You know, if you need the assistance and you don't qualify for any of the other programs, it's a great alternative.
Well, I think one other important thing that I think a lot of people don't understand. First of all, I think a lot of first-time home buyers are not aware of the down payment assistance that's out there and available for them. The number one, like when I have a first-time home buyer call me and I'm talking to them about getting qualified and those type of things, and I'm asking them about down payment and do they need down payment assistance. I mean, 9 out of 10 generally do. They don't have saved what they think they are going to need.
Right.
They're focused more on the payment than what they actually need to get to closing, which is your down payment, your inspections, your appraisal, your closing costs, all these other things.
Right.
Maybe a capital contribution for the HOA. There's always these other fees that they don't take into account. But that's one thing. The thing I was going to mention is that not all first-time homebuyers are first-time homebuyers, right? Because if you owned a home previously, but you haven't owned a home for so many years.
Correct.
You are then, again, considered a first-time homebuyer.
So it's 3 years.
That's
if you haven't
3
owned
years.
a home
That's
in
not
3
a long
years.
time.
No.
I mean, someone might own a home with somebody, get a divorce, and then 3 years later be ready to buy again.
Correct.
And they can still get qualified as a first-time home buyer and get home buyer assistance again, correct?
Well, you can only get the assistance once.
Get it.
But yes, if you owned a home and let's say you didn't do any of those programs, then you do have the option to look at that. So even if somebody has their own down payment, I'm going to run the numbers and show you, okay, if you have your own down payment, this is what you'd be looking at. If you take this program, so they have a couple options, because sometimes if you have your own down payment, you're going to get a better interest rate.
Yeah.
Oops.
That's too funny. We'll have to let you got that. So, all right, we'll. You want to let her in, or is she going a different way?
She's doing it the different way.
Okay.
Can you just give me like the last
Okay.
last sentence? That'd be perfect. Or just kind of like summarize what the whole thing was.
So what I was so if I have a client that has money to put down, so I'm always going to run a couple different options for them just to show them what it looks like. So if you have your own down payment, I can get you this rate versus maybe doing the bond program where I have to use the state of Florida's rate So maybe sometimes that might be a little bit higher than what I can get them if they have their own down payment.
Well,
So I like to be able to give them some
well,
options.
and I love giving options, right?
Yeah.
Because when someone comes to me and then, like you said, they might have some down payment, but then we're like, but you also qualify for the DPA, the down payment
Right.
assistance. And so it might be a good option for you to take that, get, the rate might be better. And then
Right.
you have this in your savings, which, as a homeowner, things can always go wrong. You don't
Absolutely.
you want to have some money in savings. You don't want to put everything down that you have if you don't have to.
Exactly. And I mean,
So-
I do have buyers and they don't even ask for it. And I'm saying, oh, well, you're a teacher. Did you know you qualify for this? So, like you said, a lot of buyers don't know that these programs are
Yes.
available. So, definitely check with your lender or give me a call and I'm happy to
100%.
give you some options.
100%. And again, when first-time home buyers call me, sometimes they'll say, "Oh, I don't think I have the best credit." And so I think they're initially nervous about making that call to a lender, whether that be you or anyone else, because they're almost embarrassed. And I'm like, no, she's going to tell you, this is what you need to pay off. This is what we need to do for a rescore.
Exactly.
This is what we have to do to get you where you need to be, whether it be next month or in 6 months or next year,
You
in
know,
order to be able to buy.
Like your client recently, we
Yeah.
started working with them like a year and a half ago.
Yes.
And now all of a sudden, they're ready to
Yes.
go. So as
They
long
called me and they're like, "Do you remember me?" I'm like, "Of course I remember you." I was like, "Okay, go to Colleen, and then we're gonna do XYZ, and then when you're ready," and then they came back. But again,
Exactly.
you work with them. It's not always a burn.
not
and
everybody's
turn.
ready right
Yeah.
now. So I can put you on a path to
Yes.
get you ready for home ownership if you're not ready right now.
100%. And I love that. See that we are here for you long term, people. It doesn't have to be you're ready, everything's perfect. Most things in life are messy and are not perfect. That's the reality, right?
Exactly.
I mean, so most people are not like have everything lined up. Even if they are someone with a great credit score and a down payment, right? They might then be thinking, oh, wait, but I need to protect these other assets and put this in a trust. And, there's always moving parts. Or, I need to take, add this person onto my credit to get their credit up. I think one other thing I'm going to touch on very briefly is that people don't understand when you are on a loan with your spouse or your friend or whoever, right, your child, that they're usually looking at the lowest rate. So it might be like this person has a great credit score. This person has the income. Right?
Right.
The other person. But it's like they're going to combine both of those things, and they're generally looking at the lowest interest rate, the lowest credit score.
When there's two, one's lower, we
Yes.
have to base it on the lower of the two.
So people don't realize that. They're like, but I have an 800 and they make 200,000. Okay, but we need the person with 200,000 to have an 800.
Right.
Because if they have a 500, your 800 credit score isn't helping you.
Exactly.
So people just the ins and outs of loans.
Well, and that's why it's important to just talk to your lender. Just be transparent. We'll throw it all on the table and figure out a solution. If you're not ready now, we'll put you on the path to be ready.
Well, and that's why we're here, to help them understand all these nuances and
Right.
ins and outs that most people just have no idea about, whether that be
Exactly.
down payment assistance or credit and how to repair it, or the long game here.
Absolutely.
Right. Well, thanks, guys. We
Thank
hope you learned
you.
something new here. If you have questions, want to get qualified, need an estimate, want to see a home, we are here for you. So we'll see you next time.
Bye.